Yes, traders. Yes, welcome to a quick market outlook on gold. So this is Gold Spot and it is analysis for the coming week. This will be from 9th of December to 13th of December. So it's just an overall projection. So make sure that you do your own analysis and also watch analysis from other traders so that you get confidence on those possible entries and the key levels that are going to be highlighted in this analysis. This is the top-down analysis from the monthly time frame. Then I'll be going down to 4-hour time frame, and in 4-hour time frame is where I provide those possible entries. So make sure that you watch this video until the end. And in my analysis, I point out the levels, now the trend lines. I point out the support and resistance. I read the candlestick patterns, and also I do the wave counts like how you see in a chart. So now I'm in a monthly time frame, and now in a monthly time frame, what I can specifically highlight is just presence of the first bearish monthly candlestick now in history. So it is now over 7 months. It is more than 7 months. We have never seen such stronger bearish candle. So it is now for the first time in November we have seen that bearish candlestick. So it is something that can alert us about the possible rejection to the downside. So now the current monthly candle is a sort of sideways. Now you see it is just a very small candlestick, so we expect it is a sideways movement in lower time frame. So now we'll see now what is exactly happening in lower time frame. But the overall picture now in monthly time frame is we are looking for a possible correction to this level. Then this will be followed by a possible push to the upside. So now in lower time frame we'll understand exactly now what is this push to the downside and what will be the push to the upside. So that's the overall projection. So let me quickly go to weekly time frame and see what are the key highlights in weekly time frame. So now this is a weekly chart, and in weekly time frame what we see is just a clear completion of the third wave. Now we see we have fifth wave here, so it is just in completion of the third wave, and also we are looking for a possible fourth wave to the downside. So now this current move is just the beginning of the formation of the fourth wave. So we expect there is more push to the downside that's coming in the future when this fourth wave is building up. That's very powerful in weekly time frame. And also what I can talk about the possible fourth wave is just this level down here. So as we are looking for the fourth wave to the downside, we can consider this technical level around this region, and at the same time we have this parallel line. The trend line is running all the way from this bottom left. So actually this is parallel to the upper channel, so in most cases we expect this one is going to be touched. So that's all with the important highlights on weekly time frame and the key levels that we are going to consider in weekly time frame. Then quickly in daily time frame, let us see what are the key things in daily time frame. So yes, in daily time frame now what we see there is we have this trend to the downside. So actually it has never happened now in history. It has been several months back. We have never seen such a stronger bearish momentum to the downside. So now actually this signifies that market is going to trend to the downside in a short term, because the overall picture is we are going to the upside. So now this in lower time frame, we'll see this is the 1 2 3 4 5 to the downside, but we have this push to the upside that's not much clear. What I can highlight in daily time frame is because this is continuation of the previous week analysis, I talked about this stronger push and it was followed by struggle to the upside. So you can consider these 9 candles. So now in 9 days consecutively market has been moving in a struggle to the upside. So now this is very clear that this is correction to the upside, and it is correcting this stronger push. Now this one, a red candle. So now if this correct this one, so we expect we may have another stronger push to the downside with the same size as this. So that's the overall picture. But in 4-hour time frame now we'll see clearly what is mostly likely to happen. But before that, remember we have this level up here. So in most cases, before price pushes to the downside, in most cases it is likely to touch this level before it continues to the downside. So you must be careful with the push to the upside and then look for sell opportunities now if that formation is going to happen. So now that is very important in daily time frame. Then quickly let me see the final time frame now, the 4-hour time frame. Now we have a lot of things now in 4-hour time frame, and actually I will be pointing out the key levels now to consider. I will be pointing out the key levels to consider, and this is the overall picture. This is the overall picture in 4-hour time frame. This is A here. Okay, so now basically for those who know Elliott wave, I'm sure they already understand. So just I have pointed out these cycles here. These cycles is just the idea that we had this push, so we'll expect the same push here. So that's the meaning of those cycles. So we expect now this was A, so we'll be expecting with B to the upside and finally C to the downside. So this is the overall projection, but as market progress, we'll understand exactly if the things are possibly going to happen. So now what I can point out here is that from what is happening, the sideways movement, what is happening from a struggle to the upside explained in daily time frame. So we see it was just a correction. It has completed wave A, so there's B there. So we expect for a push, and this is going to happen immediate on opening of the market. Price is going to push to the upside in completion of wave C. And then market will start with the completion of wave Y to the downside, and this will be wave B in a bigger picture. So that is more of Elliott waves. It is technical and mostly is based on Elliott waves. So this is the basic idea on what is expected on gold. So for next week, how are we going to trade now next week? Basically, next week we'll be watching for possible buy opportunities. Immediate after opening of the market, we can see some buy opportunities. So we'll be buying and targeting the level of 2680. So the level up here, around this level here. So we'll be targeting this level up here, the 2680 level. And now with this buy, you'll be putting your stop losses down here around the level of 2623.20. So you'll be putting your levels around this lower here. So you'll put your stop loss right here. So actually that is how you are going to take this buy next week. Then after buying to that level, so we expect market can form some selling confirmations now around this region. So you'll be also selling up to the levels of around 2600. So in most cases I recommend 2600, even though price may go deeper to the levels of maybe 2580, but in most cases consider 2600 as your take profit for the coming weeks. Now if those movements are going to be completed immediately before the end of the week, we may also take some buys here, but in most cases I expect we may end up with the sale opportunities after this short-term buy. So that is the analysis. That is powerful. Make sure that you visit our website www.asamforex.com, and you can open your account so that you can just be notified when we release our signals. And this analysis is also available here. Analysis, if you go to weekly analysis, you will find a video and all the descriptions are there, and also we'll be updating daily updates every time. So thank you and have a powerful weekend.